Hey everybody, welcome to Market Update in under 5 minutes. As I am recording this, Bitcoin has broken the $30,000 support. There's a lot of people out there panicking about the death cross that happened under 24 hours ago, where the 50-day crossed the 200-day moving average. Now the question is, how seriously should we take this death cross? There's a lot of fear in the markets at the moment, but there are a variety of factors pointing to let's not overstate how important this death cross is. Alright, now the first thing I want to look at is some historical data from the S&P 500, the stock market index. Now there are some qualitative differences between the stock and crypto markets, but nevertheless I think this data can be illustrative. So it turns out whenever a death cross happened historically, there was only a 20% chance the bearish sentiment ended up playing out. In fact, the golden cross ended up being a much more reliable predictor of price action. There was a 3/4 chance whenever we had a golden cross that the bullish sentiment ended up playing out. And that's one of the nice things about having a death cross, right? Don't forget, whenever there's a death cross, that means there's going to be a golden cross at some point. Now, another thing worth noting about this death cross is that observe the 200-day moving average is still going up, right? So this is not the worst type of death cross that we could have had. Now, another thing worth mentioning is we've already had a big dump. We had the largest capitulation event, right? A month ago, May 19th. Since COVID began in March 2020, how much lower can things go? The total market cap at the moment sits at around 1.2 trillion, and that is lower than the market cap for the altcoins alone 6 weeks ago. Right, so that really begs the question, how much lower can things go? And if you look at all the on-chain data, it is suggesting that this is a mid-market cycle correction. It's not a small correction, it certainly is a pretty substantial one. But the 4-year market cycle structure remains intact, although in the next few days everyone's going to be watching to see if this breakdown under $30,000 is going to hold. Where things get really dicey is if it breaks the previous market cycle all-time high, $20,000. That's when things get really dicey. Now, despite the technicals looking quite bearish at the moment, the fundamentals are strong this bull run. We have institutions, we have national adoption. El Salvador accepting Bitcoin as legal tender. Businesses there have to accept Bitcoin. Tesla recently reversed their stance on Bitcoin, partially at least, that they'll be accepting Bitcoin again once environmental controls are put in place. We have the wealth of blockchain use cases beyond just Bitcoin continuing to explode. We have DeFi on Ethereum and the Binance Smart Chain. The Binance Smart Chain really hitting off this year. On Ethereum, EIP 1559 coming out soon. Ethereum 2.0, that's in the works. Cardano's Gergo and Mainnet finally coming, introducing smart contracts. Charles Hoskins going to Africa, signing deals with African governments, installing Cardano directly into national infrastructure. How awesome is that? New blockchain technology, Solana, Avalanche. Niche use cases, you got Theta for decentralized video streaming. You have VeChain for supply chain management. I can go on and on. Blockchain and crypto use case fundamentals, they are and remain very strong. Now, with all of this said, we do have to be wary of what's going on at the moment. Right? If you believe in the Wyckoff accumulation phase, then things are perhaps going to go worse before they become better. And if you zoom out a bit on Bitcoin, we have this head and shoulders scenario going on at the moment. Shoulder, head, shoulder. So if this breakdown here is confirmed, this could point to something rather serious. Now, going back to the fundamentals, China's crackdown as they edge closer towards the digital yuan. S&P 500, are we in a bit of a bubble as the US Fed threatens to taper off all of their money printing and QE? And there is just a lot of general fear in the markets, fear and uncertainty in the markets at the moment. So ultimately, we find ourselves in a situation where it's going to take a lot of good news, I think, to lift us out of this malaise at the moment. Remember, in a bull market, people ignore the bad news. In a bear market, which we are unfortunately in at the moment, even if it's just a mid-cycle correction, people tend to ignore the good news. We need a lot of good news. But once we get that critical mass, I think we're going to be well on our way to that 100k mark that everyone has been looking forward to, but was humbly denied in the middle of May. Alright everyone, have a good one, and I'll see you in the next one.